Okay, so welcome. So I guess we're going to talk about some trading shit. I think this is something that everybody, wants to talk about. There's lots of questions. People always have a lot of questions and they want to know various items and things like that. So, we want to just go over some basics. I think there's a lot of questions that we ask every day in the chat rooms, and I think it's part of the learning. So I mean, I'm not too worried about that. And like I say, I don't get upset the fact that people ask questions. I get upset over the types of questions people are asking, in the sense that you're not using your skills properly. You're not thinking critically about what you're doing, and that is going to hurt you as a trader, because there are a lot of instances where you have to make decisions, and at this point, the way that you ask questions tells me that you're not making the right decisions even when you're trading, just based on the way that you ask your questions, right? So that's why I want to sort of talk to people, and I have a lot of people on this right now just to go through some things and help yourself and educate yourself. I mean, a lot of you guys are younger. I'm 37, so my critical thinking skills are a little bit more refined or developed, and that doesn't mean that it will be a disadvantage to you, but it's more of how you approach what you're learning and how you're studying and how to be effective. I think that's sort of what I want to try to convey today in this webinar, is using the way that you teach yourself and the resources that we have to be more effective as a trader, but then also ask questions that will give you better answers. Okay, so I mean, basically this is sort of the day-to-day routine of all the groups. I'm in all the groups, so I'm in all the various, I guess, webinar groups and things like that. So I want to make sure that we will be going through some things here and talking about, just your habits and how to approach this correctly. So we'll go through this. Sorry, I'm just reading a bunch of questions and things like that. Give me 1 second here. Okay, sorry everybody. I just had to deal with that. So as I was saying, I apologize. So, essentially what we're doing right now is, similar to what everyone is doing each day, clicking on charts. People are asking, is this pair going to go up and down? Asking who trades what? Asking, who trades this pair? Where should my take profit and stop loss be? These are things that you as a trader, you should already know what's going on. And, these are things that we're going to talk about today, just because you understand trading, but these are things that we want to figure out and say, okay, this makes sense or this doesn't make sense. You know, and everyone thinks they're the best trader and everyone thinks they know what they're doing, but in the end of the day, your preparation to trading is probably the most important thing other than trading. Um, and I think a lot of people misjudge this, and a lot of people, don't take it as seriously in terms of the way they approach trading, and also too the amount of effort that you need when you start to get involved with trading and figuring that out and saying, okay, this makes sense, that makes sense, or why am I doing what I'm doing? And I think a lot of people need to start asking those questions to themselves before they come into the groups and saying, is this pair going to go up? Is this going to go down? You have to really focus on your plan, because at the end of the day, you're just going to click buttons all day, and you're not going to make money. You're going to lose money. You're going to get lucky more than you're going to actually understand what you're doing. You're playing essentially with the biggest players in the world, and you're just a small fish. So you have to give yourself the best edge. You have Janet Yellen. If she talks, the markets move. If Donald Trump talks, the markets move. And then you have institutions that basically just don't give a shit about you, and they'll just play around with the market as much as they want. And I think at that point, you have to understand something. You have to turn around and say, give me 1 second. Sorry, there's people asking me questions. Oh, sorry, those are hands up. Yeah, okay. Sorry, I thought there were questions, but people are putting their hands up. So like I said, if you're not going to go into battle properly prepared, these are the people that are going to ruin you. Just a sample size. I mean, forget about everyone else around the world. This is just the U.S. market and U.S. dollar pairs. I mean, think about everybody else and what they're doing. And now you have to, you're saying, well, where's my take profit? Where's my stop loss? What am I going to do here? And I think a lot of people forget that it's important to have all this prepared before you even think about executing a trade. You have to visualize what the trade is going to do before you even enter the trade. I hear people say in the chats all the time, well, where should I put my take profit? That should already be determined before you enter the trade. That should not be something you're thinking about as the trade's developing. I think what we have to do here is you have to come better prepared to battle, because I mean, otherwise, this is your competition, and this is essentially you in the market. You know, you're going to effectively have issues with this. You're going to turn around and you're going to be sitting there at your computer, and you're going to be just upset with yourself because you're not able to do this while other people are succeeding. You're wondering why you're not. This is what you should be doing. This is how your life should be. This is how you should be when you're trading. And this is what you want to be in terms of where you want to go with everything what you're doing. Sorry, I'm just answering stuff here. Okay, sorry. So essentially, let's talk about building a trading plan. And what I mean by that is, when we look at building a trading plan, is what do we want to do? And I'll move this over 1 second in a minute. Stick to 1 to 3 pairs and stick to a proper time frame. Don't trade, USD JPY in the middle of the afternoon. It's hard, Eastern time. Don't trade USD CAD during the Asian session, like things like that. But more importantly, when you work with 1 to 3 pairs, understand everything about those pairs. Understand the economics of that country. Read all that information. So, when you turn around and you say, okay, I want to understand what's going on with USD CAD, it's important to say, okay, what's going on in those countries? What's happening? You have to get a full diagnostic of that country. You can't just trade blindly, because how is news going to affect things? What's going to happen? So really plan and really stick to what you're doing. Figure out your risk to reward ratio. Minimum should be 1 to 1. So you want to make a pip, you have to risk a pip. Figure out your risk tolerance. Everyone always asks me, well, what's my proper risk tolerance? It's up to you. But I mean, if you're going to use 25% of your account as a risk tolerance, you figure if you're wrong 4 times, your account's blown. And basically stick to it. If you have a winning trade and you're done for the day, you're done. Don't go hunting other trades. It doesn't matter if the market goes up or down or whatever it does, but you're done. And I'm always perplexed that for people who want to trade and who want the financial freedom, you're in the chat room 24 hours a day trying to find trades, trying to trade, doing more trades. Meanwhile, the top traders and your mentors take 1 or 2 trades out of the day and they're done. And now the argument will come, and people will say, well, Ted, I'm trying to build my account. But what's the hurry? There's no hurry here. You don't have to, be rushing through this. You don't have to make $1 million in a day. You don't have to do it in 6 months. Even if this takes you a year and you're working part-time and you're trading, what's the big deal? As long as you're going through the process and you're trying to understand what's going on, and you want to learn just what is happening day in and day out. And that's really the key here, is figuring out what you want to do with your life and make trading part of that. Similar to when you go work out. Everyone works out differently. Everyone has a different weightlifting plan. You can ask for suggestions, but you have to make it yourself. And it's so important to figure out that for yourself. No one can teach you your risk tolerance. No one can figure out, when you want to trade. That's all up to you, but you have to set that plan in motion. So when you turn around and you look, and here, I'll pull this up here, right away. So if I'm building out my trading plan, I am trading 7 a.m. Eastern to 11 a.m. Eastern, most likely, maybe. I am focused on USD, JPY, and gold. I am looking to catch trends and breakouts. I am looking for 100 pips over 3 to 4 positions stacked or more. I will take less than 100, maybe 40 to 50, but then I am done. I check the news first. I check what happened last night. I check pre-market data. I check Bloomberg, Twitter, etc., etc. I do all that before I even look at charts. I'm doing all that. Now I look at my chart, and I'm going to show you exactly what I do when I actually start trading. Charting. I use 3 time frames. It doesn't matter what 3 time frames you want to use. Some people use 4 hour, 1 hour, 15 minute. Other people use 15 minute, 5 minute, 1 minute. Some people use just a 1 minute chart. The key here is you have to get an idea of what's happening in the market overall. So when you enter a position, you're comfortable comfortable with the way the position is going to move. So, when you look at things and you say, well, the market's telling me different things, then don't trade. What's the hurry? If you can't figure out what to trade, why are you forcing it? Why are you trying to find a trade? You don't have to trade every day. And once again, it comes down to the fact that because you see everybody else doing it, doesn't mean you have to. You have to stick to what you're comfortable with. I look at all the top mentors, I look at all the top traders, everybody does something differently. Javier trades on the 1 minute frame like it's going out of style. You can't copy what he does because he's intuitive in what he does. If he tries to teach you that, he will give you the basics, but there are things what you have to make a decision on that you need the background to ensure that decision is done properly. Now, as that comes with experience, you can pivot a little bit better, but more than likely it's understanding, like what are you doing and really what can you do with your own trading to make yourself better? Not saying, well, this person's making 100 grand a day. If I follow them, I'm going to make 100 grand. You're not, because you're not that person. You have to make trading your own. And that's sort of the key. And a lot of people are just not making it their own. They're trying to piggyback off of people. And like I said, it's okay to ask questions and get suggestions, but you have to figure out what works for yourself. Whether that's sitting for 2 months just looking at charts, whether it's demoing for a couple of months and figuring out what's happening, follow your plan, execute, build your plan, and build your journal. So when we talk about journaling, so if I turn around and I go back and I say, okay, fine, I want to know, like, what are you going to put in my journal, right? So you've done your trading plan, you've built it out, and what you're going to say to yourself now is, okay, my trading journal, right? So I'm going to document all my trades. So one, time, date, and pair. Why did I take the trade? Now this is subjective. You can say anything you want here. Trend, scalping, opportunity, reversal, etc., etc. Doesn't matter. 3, the outcome. Win, loss. 4, is there anything in particular that made this trade good or bad? And here's where you would say maybe news, candles, trend was strong, we bounced off support, resistance. So these are things that you're going to write, because as you start trading over the years or over the months, you're going to forget why you took those trades. If you start documenting why you took those trades, that's going to help you remember why you were successful or why you failed. And the more successful you are, the less times you're going to repeat the failure, but it's also going to give you an opportunity to relive the glory days when you're having a bad trading day. You're going to say, okay, listen, the other day I was able to knock off 2 or 3 positive trades. Today is just an anomaly. So if I do 5% today and 1% tomorrow, and then say 5% the next day, you're doing pretty good because you're averaging 3% over 3 days, right? So 3% per day essentially. There's nothing wrong with that, and you have to look at the fact that if you do something like that and you say, okay, I don't understand, this is not good, but with a $500 account with 3% growth from April 3rd to June 30th, 500 turns in the close of $3,100. That's not a problem. Like there's no issue with just making that kind of money. If you're working full time, it's not a problem for you just to make extra income on the side. If you want to trade full time Forex, wait a year, wait 2 years. Things are not going away. There is nothing happening here that is going to say, hey, suddenly the market's going to disappear. There's no hurry. There's always going to be people better than you. There's always going to be people worse than you, and it's just so important that that we have this issue, and that you just take care of yourself and just be in competition with yourself. And I think people have to realize that this is part of life, that you're always going to have someone better. There's always going to be someone worse. Just stick to what you want to do. Nobody says you have to trade Forex full time. Maybe you want to trade part time and you enjoy your job. I worked and I traded while I worked. I traded in the evening, I traded the Asian session, I traded in the morning before I went to work, and during work, I didn't look at my charts. I didn't look at anything. So really focus on yourself, focus on what you're comfortable with. Even if you do 1% a day, there's nothing wrong with that. Look at the latest mutual funds. Look at all the latest data. Mutual funds are only returning 20% for the year maximum. Maximum. Like that's the top rated mutual fund. If you even found it and you were in at the right time. Here, if you do 1% a day, that's close to 20% a month if you only traded 4 days a week. Think about the opportunity in terms of return on investment, not necessarily your account growth. Look at just the return on investment. Focus on that. And I can't stress that enough because you're just going to kill yourself if you're trying to flip 500 into 10,000 in a month. It's not going to happen. Focus on yourself, do what you need to do, and you'll feel a lot more comfortable just following the natural progression. As you get stronger with trading, as you get more comfortable, you have to just understand that this growth will happen organically and suddenly you'll be moving a lot faster. It took me 6 months to make my first 100 grand, and that was $2,500 starting with, and that was me working 8 hours a day on the charts. If you're not putting in that time, you're not going to get those results, and it doesn't, maybe you won't even get those results putting in that time. Maybe you're a different person than I am. Like this is the thing, when you start to diagnose and address what you're doing, these are things to keep track of. And really what I wanted to tell people is that's so important in terms of what you're doing. And like I said, but I want to quit my job. I want to buy a new car. I want fancy toys. I want to trade bigger lots. I want to live like royalty. If you can't trade at the bottom, you're not going to trade at the top. Remember, it's one day at a time, one trade at a time. And none of the stuff that you want is going to happen overnight. And frankly, it might not happen at all. So really understand yourself and put yourself in the best position to win. That means if you need to work, work. If you need to get a full-time job or a part-time job and you can't trade full-time, that's totally acceptable. There's no right or wrong way to trade. Don't think because people are trading full-time that you need to be a full-time trader. Maybe you want to just make an extra couple $100 a night. There's nothing wrong with that. At the end of the day, you're competing with the biggest and the most, I guess, the evil people in the world, which are corporations, hedge funds, institutions, and they want your money. So the longer you're there at the table, the more likely they're going to take it from you. So if you can just slide in and out on a daily basis or maybe once or twice a week, you're doing fine. You're beating 90% of the people that are failing at Forex by just being consistent and doing what you're doing. All right. So like I said, build a plan, stick to the plan, and it's not a race. And really, I want everyone to just really get used to that and say to themselves, okay, this makes the most sense for me, or sorry, what makes the most sense for me, and what can I do to just improve what I have? Okay, so let's go a little bit and talk about using the Google Drive. And why is it there? Okay, so let's take a look at the Google Drive and let's see what's inside there. And I know you guys all have variations, so I'll show you my drive and I'll show you the parts that probably are shared with everybody. And what I want people to realize is the amount of information that's in there and the stuff that you can look at to get a lot of your answers. All right, so this is the vault, and you'll see here you have a lot of stuff going on. We have a lot of things, okay? So when you start to go through, like I have my new trader read me first, You have webinars. Like when you start to open up all the webinars, like you can start to see all these various things. If you don't want to read and you just want to watch, you can sit and you can watch all these videos. You can go through all these things. You want to read books? You have books. You have books on economics. When people ask me like why things happen the way they happen, you have all these books on economics. You can read those. You can understand more about the news and fundamentals. We have Forex strategies. You can talk about all the strategies that you want to. Read them and look at them. Psychology. I mean, we don't have a lot, but I mean, there's a couple there. So, I mean, maybe we have to build that up a bit. The Forex, you have more strategies and more information again. You have all these information, gold, Elliott wave, all these things that people ask, price action, patterns. People are always asking these things, like even looking at pairs. Like you can even just click on things and you'll understand what's happening with what's going on. You turn around and you look at price and time. You can go through all these books and just, you don't have to read them, but skim through them and understand, what's happening. Entries and exits. Everyone's always asking, how do I enter? How do I exit? There are so many resources here for you just to skim through and just understand what's happening in a basic formation. Your analysis. We have people adding analysis here all the time. I mean, I add analysis, Nick's add analysis. I mean, we have Dave adding analysis. They're there. Member contributions. You have all this information here. You have all these various people that have done work and that have put in all this information here. You have NFP, you have Olivia, like the pound, Japanese yen. You have RAG. You have all this stuff here that you guys got to use. Take the time to read through some of it and figure out what makes sense for you. If you want to learn about EMAs, you have an EMA strategy right here. And it's important to say what is happening with your strategy and how can I maybe use what's happening here. There's an analysis here, there's back testing, there's so many different things. When you go into Rakil's drive as an example, like Rakil has like a whole bunch of stuff going on. There's a webinars in here as well. You have so much information at your fingertips. You have so much more ideas, suggestions, information here. Use the drive. Go through it. I mean, even when you look, sorry. All my bootcamp or my webinars are there. You have trading plan information. You have all this information here. If you want to use Snagit, you can turn around and just take Snagit and use that as your charting. Things like that. So once again, get involved and look at all the indicators here. We have auto close scripts. You have installation instructions. There's all this information once again in the vault. Use it to your advantage and make sure that you're able to go through it and understand everything. Now everyone has a copy of a vault. So each mentor has variations of this, like I said, so they have their own variations, and that's why you sort of pay each mentor a fee, because you're getting access to what their information they have. For the most part, we spread it across all ways. We make decisions based on that, because once again, too, you don't want someone paying one person and then the other person doing all the work for them. You really want to work with your mentor, but I mean, once again, we do all work together and we try and help there in that respect. So I mean, at the end of the day, use the vault. Really put yourself in a position to get the best, I guess, the best information you have at that point. And now we'll chart. Okay, so now with charting, I think there's a lot of variations once again, and that's not a big deal. I don't think there's a problem with that either, and I don't want people to be upset when they see what I do and say, well, I don't want to do that, or that's not the way I do things. And I don't want people to misinterpret what I'm doing, but I want you to I want to give people an idea of what I think is happening and what I want people to understand about what I'm doing. And I think that's sort of where I want to, put everybody's mind at ease and, figure out and say, okay, what makes the most sense for me and how am I going to go about charting and what do I want to do when I'm charting, okay? So here is what I would say USD JPY on the 5-minute chart, okay? So we have a 1 minute, we have a 15-minute going, so we have 15 minutes right now. So right away, you can start to see a lot of information, right? So if I turn around, I can see right away that we're trending. And what I mean by trending is we're trending down. If you start right away and you say this is, the top and this is the bottom, I mean, you can start framing things for yourself and you can say, this is the direction that we're going to move towards. We're in that direction. So right away you have a little bit of a trend, right? And you say, okay, that makes sense. And then we had this trend up that way and now we're trending back down. This section over, or sorry, let me rephrase that, but this trend line here is just a continuation with this trend line here. I mean, you don't have to draw the line and say, okay, now we're going in that direction. But what I'm saying is we're still trending down. We had basically, what you can say a double top here. We pulled up and then we dropped right back down. But keep in mind, we're in the 15-minute frame. There's a lot of movement in a 15-minute frame. And this is where I don't want people to get confused, because if you turn around and you look at a 15-minute frame and you say, okay, well, I'm going to trade the 15-minute, you have to be aware of the potential swings and the potential pitfalls of trading the 15-minute. Because now look at the 1 minute. Right away, you have a lot of stuff here. And, I was goofing around with 15-cent lots, I think, on this one. So you can start to see what was happening here in terms of how we're trading and what we're looking at in terms of the 15-minute versus the 5 minutes. So now I'm going to show you my thought process. Okay, so we're going to start off with the 1 hour time frame. Okay, so the 1 hour, because I want to get in and out of trades relatively quick, I'm looking at the 1 hour time frame. And what I'm doing is I'm going to now go in a little bit. So you can see I've zoomed in just a bit. And what I'm looking at is you have the 27th of March to the April 5th. So basically, as wide as my screen is, that's what I'm looking at right now. And what I'm doing is I'm looking to figure out what is going on in this chart, and I'm looking to build a range. And what do I mean by a range? Is I'm going to go around and I'm going to find a support and resistance level that makes sense to me. So right away, I can start to see something here that is formulating possibly a resistance level. And then as I go through here, possibly a support level, right? I'm just picking random spots. Once again, this is something that's arbitrary, but what I'm looking at is I'm looking to see dynamics in the chart. And what I mean by dynamics is we have up, down, okay? So I'm looking to see a pattern. I'm looking to see what's happening. This stuff over here is probably an anomaly. And what I mean by anomaly is it doesn't fit the rest of this pattern because we have a stop here, a lot of stops here, a lot of stops here, a lot of stops here. Okay? But what I'm saying is this is important. This section over here probably isn't going to help you if you turn around and you say, okay, I'm going to put my resistance level up over here. Because right now, as it stands, you're looking currently at this section right here, and you're looking to see what's going on in this area over here. We haven't seen any information to tell us, excuse me, that we're going back over here. I have information to say that we're going back down here, but you don't have that information. So now when I've built out my range, give me a second, let me delete this. When I built out this range, I can see right away my range is about 1,000 pips or 10 standard pips. Okay, so now if I want to turn around and I want to trade this range, I'm looking now to say, okay, how many pips out of this range do I want to take? Do I want to take 100? Do I want to take 400? But more importantly, when I look at these candles, what kind of range are the candles giving me? So when I start to look at candles and I start to take a closer evaluation, and this is what I ask people is, this candle was about 200 pips long. So now when I start to dissect my candles and I start to look a little closer, more than likely we can get some range out of these candles. And then once again, you're looking at your times. You're looking at where the most movement was. So 1400 was basically 7 a.m. Okay, so when you start to look at things at 7 a.m., we pushed up for an hour, we pulled back down, and then we pulled further up again. So over the next, say, 1, 2, 3, 4 hours, we were able to pull up all the way through to what we would consider a resistance at this point in these areas yesterday. Moving on to today, you can see right away today at 7 a.m. we dropped and then we pulled all the way back up. So if you turn around and you say to yourself, okay, give me 1 second, let me just change it. If we zoom in and we look at today as an example, right? So today is April 5th. I woke up at 7 a.m. Okay, 7 a.m. This is where we were at. Okay, so right away we start to look, and I start to look at this chart, and I say to myself, when I zoom in, what are things that I see right away? So more than likely, over the night, we had a push down, and then we started to go back up. But more importantly, I'm looking at these candles over here. I'm looking at this section over here. Because what does that tell me? That we've pushed down, we've hit a support level, but we've never come back to it again. Okay, so when you start to examine it a little bit closer and you start to look and you start to say to yourself, okay, where do I think the market is going? This is what I mean by looking closer at patterns, is you're starting to see that the candles are creating higher lows, right? There's higher lows being created. If you look, maybe they're not exact the same, but even still, when you look, there's higher highs being created. So when I start to look at the charts and I start to see what's happening at 7 a.m., which is, let me give you this candle. 7 a.m. is this candle right here. Where are we in the trend? We're pulling back a bit. So we pulled back because what did we do? We created a higher high and we started to push down. Now, right away people are going to say, well, isn't it a downwards trend now? Well, not necessarily, excuse me, because we don't have enough confirmation here. You can see where we have stacks of candles. There's no confirmation to tell me that we're dropping at this point. What it's telling me is we're pulling back because price needs to breathe a bit, and then we're going to continue up. So when you start to see and people say, well, explain the wicks, wicks filling, because everyone always talks about that, and everyone's like, what does that mean? Okay, so here you go. Here's your wicks. We have an upward trend. More than likely, these wicks will be filled. So when people talk about that, oh look, I made a phallic symbol. When people look at stuff like that and they say what wicks are being filled, it's these wicks are being filled because there was a tap into that region. So once again, if you turn around and you say, okay, show me your supply and demand zones. Okay, so do this really quick. So we tapped into that zone essentially here and we pulled back down. But here is a more important zone, which you can already see that we tapped into it again. We tapped into that zone. Here's another zone that we tapped into. So when you start to see the various zones, when you start to tap into zones and you start to say, okay, well, what's going to happen? More than likely, this range over here, as an example, this section here is going to fill. So it pulled down. This wick didn't finish below this wick. We can say, okay, this wick dropped a bit, but once again, look at the next candle over here. We're not even anywhere close to it. So if you want to get technical, you can say, okay, we're pulling down, but here, once again, you're looking at confirmation. You're saying, okay, was 2 candles enough confirmation for me to say that there was going to be a change in trend? I think that is probably a more important thing to look at is you don't have a change in trend yet. Even though you think one candle is, it's not. And this is where you have to use your confirmation and say to yourself, okay, well, now what's happening? So right away you can see here, 7 a.m., more than likely getting ready for the US market. 8 a.m. now we're pulling back down and we're going up. So we filled that range. Okay, so this has now been filled. We're on to the next one. So what happens here? Perfect example again. We pull all the way up, we tap into this range, we pull all the way down, and we pull all the way down further. And now we're starting to move up, right? So what does that mean? We should fill this range here. So what happens? We go up, and essentially we filled it. And now we've pulled back down because we've hit that zone again. You can see the zones by the large wicks that pop up, that appear. And even here you can see we sort of tapped it a bit and then we moved further up again. So that's what you're looking for. When you're looking at zones, that's essentially what you're looking to see, is you're looking to see where we have those huge wicks, where prices tapped a region and pulled back down. Now you can say it's almost like a resistance area, but it blew through resistance, but then it pulled right back down. Where here you can see we tapped resistance and we didn't have a fight. Here we have almost a zone. So you're looking at that zone saying, okay, more than likely we've tapped down. Now, when you start to look a little closer and you say, okay, well, no, what's happening in this region over here? Because we're live right now, right? More than likely, if you're looking at this from a higher high and a higher low, so we've dropped back down, gone back up, now gone back down, we should continue up in that direction, right? Because now we're starting to build a bit of a trend. So we broke a bit of trend here to come through to hit that zone, but we're moving further through and further up once again. So here is where you have issues and you have to say, okay, is this a fake out, or are we tapping into this zone here and now pulling higher again? So this is where I don't have confirmation yet of what's happening because this candle is very indecisive. So I'll sit out and wait for a clearer confirmation. With all things being equal, the way that we have the bounce and the pull, bounce, pull, bounce, more than likely we should go up a bit, correct? Just by the wicks of the candle, you can see we're creating almost like a rocket ship that I call them, and we'll pull up a little bit higher. Now, does that mean that this is going to be correct? Maybe not. Maybe we're going to finish off basically 3 crows. We have 1, 2, maybe this is going to be 3, and we're going to come and we're going to tap into this zone here and go further down. Now, how do I know that? What do I know about what's happening right now? I don't know. So what do? I zoom out and I go to my 4-hour. So now what does my 4-hour tell me? My 4-hour says we had a hard pull down because of news, and now we're pulling right back up because you can see once again, when you zoom in, you can see all these little wicks where we've pulled and we've hit zones. More than likely, they've tapped them and now they're retracing a bit. So when you start to look a little closer and you start to see what we have in terms of zones, you can see here, that's probably a huge zone. That's probably a zone we tapped, and this is a zone here that we tapped. So in that region, you're saying to yourself, and you can see this zone carries across, that these are important points or important pivot points when it comes to trading. So as a trader and as a brand new trader, what you would be doing is you would say, oh, okay, I'm not going to take a trade until we come up over here and I get confirmation of a downward push, or I'm not going to take a trade here unless we get an upward push. But if we break and we come to a new zone, I can take a sell position. Or we break and come to a new zone, I can take a buy position. That is how you trade. That is what you're doing when you're trading, is you're essentially looking for the best situations in terms of your trade management. You're not trying to take a trade over here and go, oh, is it going to continue up? You have to wait for breaks. You have to figure out where we are in the movement. If you're already in a movement here, that's fine. You don't have to worry. Like, if you took a buy here and you're still pushing up, you don't have to really worry. All you're worried about is, okay, where am I going to have my take profit? And that would be discussed before you enter the trade. Similar here. If you took a sell and you were already down here and it pulled back up, you would then make a decision and say, okay, am I happy with this profit, you know, in terms of my take profit, or do I still think there's momentum down? Because if we break this resistance or this support area, we're going to pull further down. So these are things that you have to think about as you're trading. It's not just, oh, okay, I'm going to take a trade, or do we think it's going to continue up? You have to wait for, excuse me, you have to wait for confirmation of that trade to continue moving in one direction or moving in the other. And that's where these wicks and, you know, I would say zones give you that information, because you can start to see history and you can say, hey, it tapped over there and then it disappeared. All right, so there are some questions. Give me a second here, let's go through them. That double top zone is perfect with 61 fib? Sure, okay, if that's what you see, great. Was eyeing that area for a short continuation in the line descending? Okay, good. Confirmation is just waiting for candles to form a direction, correct. Pull down, correct. How many candles do you think we need for a change in trend, or just higher and low? Well, when you look for a change in trend, you look for the higher, bigger time frames. You want to look at the longer time frames because they give you more of an accurate interpretation of trend. Any way to predict range fill fakeouts where it may only fill the range and up halfway? Well, once again, this is what you're looking at in terms of previous data, right? So if you're looking at what's happening, you're going to have a better idea. So here is an example, okay? So we're going to go through this right now. So I'm going to say I took a buy over here, okay? So this is where I took my buy because I realized the trend was up. I got a strong trend here. I pushed up here, tapped, and we pulled down. So right away, I have a decision to make. Do we think we're going to continue, or do we not? Right? So at this point, you know, we've wicked down and wicked up, and now we move into the next candle. We've pulled up. As soon as we start to pull back down, if we go past this candle over here, more than likely we're going to continue that trend downwards, right? So this is something you have to be aware of, but you also have to be aware of when you look to your left, look at all the times we've hit that region and then rejected. So this is where you make your judgment call and you say, okay, this doesn't make any sense anymore, I'm exiting the trade. That is what you're looking for when you execute your trade. So as an example, if I execute this trade, I would look over here and see this stuff, right? And I would say, okay, I'm going to have a take profit mark probably right in this area here. I don't want to try and grab everything. I want to grab the biggest percentage of it, knowing that more than likely we're going to come over here, because you can even see near the bottom, you still have zones there that it could pull back on you as well. So when you get to this area, this is like a red flag area, right? Because you know that there's probably conflict or issues here because you have all this stuff on the side telling you that information. So use the left side of the charts for your benefit at that point. Do I use fibs? No. Bearish engulfing candles, so don't you think there would be a move to the downside? Sure, if that's what you think. Can you give an example of what confirmation would look like? Okay. Do you find the lower time frames are respected in comparison to the higher time frames? Well, I mean, that's a loaded question. Higher time frames, lower time frames, everything is respected to it within reason, right? So you have to use your judgment and realize where are we at the top or where are we at the bottom, right? Can you go over account growth and management again? Okay, we will. Strong 4-hour momentum, continue push up. Okay. Someone's giving me question marks. Okay, so let's go into one of my favorite pairs I trade, which I'm really good at, and I'll say that because I can, gold. Okay, so let's look at gold. Um, what I want to look at with gold is I want to walk you through sort of my thought process every morning with gold. Okay, let's go. Let's shut this down for a second. All right, so here we go with gold. Now gold, I'll go through gold. I can go through a little bit of, that didn't work. I know that was going to happen. Trying to give you a bird's eye view of what I looked at this morning and why I took sells. Okay, so this is the 1 minute chart on gold. Okay, so this is what I woke up to this morning. When I woke up and I looked at my charts, right away, without even hesitating, I know we were having a drop. Okay, I know right away just because there's been no indication to me that we're gaining strength. So right away, that's what I look at. And if I go into the 4 hour, I'll zoom in a bit here. Uh, okay, let's just go to where I would have. All right, let me see if I can zoom in a bit more. Okay, that's the most I can zoom in. Okay, so this is probably not going to be the greatest example just because I can't do what I want to do with the charts. So this is your 1 p.m. candle, this is your 11 a.m. candle, and then this is your, I guess your 5 to 9 a.m. candle, okay? So with all things being equal, this is what I saw this morning, okay? So this, for simplicity's sake, this is what I saw. So saw this, saw this, saw that, and then I saw that, okay? So with that being said, when I'm looking at the higher time frames, these are 4 hours of movement, right? So this is like 16 hours, here's like another 16 hours, right? Like when you start to evaluate, like this is almost a day's worth of movement. So you'll notice that the market moves, and you can see here there was consolidation at that point because the candles were similar style, but the market moves within a range, okay? And this is something you have to understand. When you look at the market's not going to fly from here to here in one day. Like we're not going to go down to 1239 from like 1255 or wherever we're at there in one day. It's not going to happen. So you have to pick and choose carefully how you want to evaluate your ranges and how you're going to evaluate your trades. So when I see this on the 4 hour and we have a push down, more than likely the trend is going to continue at that point. Why? It just is. I mean, this is my judgment. I see the top here. I see a top here. This to me looks like there was a major region here of price, or a zone. And I'm thinking to myself, okay, more than likely this region over here looks like a region of price zone, right? Because you have wicks here. Look at that long wick. You have long wicks here giving away all that information. So when you start making judgment calls, you're starting to say to yourself, okay, in most instances, there's an opportunity here for me to take a trade, and I just have to evaluate how I'm going to take that trade. And this is what I'm doing, is I'm saying to myself, okay, if I only need 100 pips, more than likely, I'll be able to find that within that range. And that's what I'm looking for here. So when I turn around and I'll go out of here, that's what I'm initially looking at. I'm saying, okay, we pretty much came to a top a few hours ago, but now we're starting to pull down a bit. And that's from last night. So more than likely the trend is going to continue. Yes, so the webinar will be for everybody as per the instructions. wick fill. Yes, the wick fill. So that's what we're going to talk about here in a second again. But once again, it's a little bit higher on a higher time frame. But what I'm going through is I'm going through my thought process of my trade this morning with gold. Okay, so now we've seen here as an example the 4 hour. Okay, so now we'll jump into the 15-minute and let's move over to, and you can see I really don't have much on my charts, but I go into the 15-minute and we're gonna go over here. Let me close these off again. So what happens when you're looking at charts. Okay, so you can see right away here on the 15-minute, and I'm gonna point out some things. So this here, this region over here, 6:30 a.m. This is like 7 a.m. Okay, so you can say, okay, there's potentially a channel formed. Very rough drawing, but once again, I'm visualizing what is happening here. I see all these candles, and I see this candle, and I mean, I'll even do it a little bit nicer for you guys. If I was to go up from this candle here, you can see I have a downward trend, okay? I'm looking for 100 pips. So if I turn around and I take a sell, in 15 minutes, I get 122 pips. So if I close at 96 pips, I'm okay. But also too, if I continued on through the news, you would get even more. But what I'm trying to say here is we had a drop. This here is almost like a consolidation, providing we don't break that trend. And you're taking a trade on the basis that we're not breaking that trend. And as soon as we move, you can see the next 15-minute candle pulls us right back into the trend. So when people ask me, well, how did I know that that was going to happen? It's experience. It's realizing that we have a lot of what I would say very strong indications here that the trend isn't breaking, because we have a lot of candles that are following that pattern. So when this candle comes and it pulls right back down in a 15-minute candle, you see it happens pretty quick. More than likely, we're going to continue on that trend there. Okay, so now let's take it a step further. Does every single wick get filled? No. Entering on that second candle? Yes. What would be your confirm in this instance? The trend. Small wick on second one and big bearish movement on the body. Didn't happen yet. Did you put a sell stop? Because at that time you didn't know it was going to happen, right? Well, more than likely, I just took a market order. I had my stops and my take profit. I took a market order. I once again, this is based on experience, based on what I saw from the whole entire movement the night before. We were in a continued downward trend. That's what I was looking at. So now let's go into the juicy 1-minute chart. Okay, so now we're in the 1-minute frame here. All right, let's get into the 1 minute. All right, so now we're in the 1-minute frame. It's not going to be as clean. Let me see, I'll have to zoom out a bit so it's a little cleaner. All right, so here we are in the 1 minute. So we've looked at the 15, so I'll go back to where we started, which was 7 o'clock. Okay, in the 1 minute frame, we moved up a bit, but you can see across, we never really broke anything. So these are minute candles. You don't really have to worry about it doing this in the 1 minute because it's moving up maybe 10 or 20 pips or 30 pips. It's not a big deal. This is more of just to let you know that it's not breaching the resistance level that you thought it would breach at that point. That's part of your bigger candle in the 15-minute. When you look at the 15-minute candle, that little top, when the candle looks like this, that's what this stuff is right here. That's your 15-minute candle going up top. So now what you can see is we did a bit of consolidation. We had our dojis indecision, and then the drop started. So we dropped all the way down. And once again, if you look very closely at that drop, what you're looking at is, so I took my trade over here, 100 pips, okay? The most drawdown I was in was 74. So I'm maintaining my one-to-one. So 74 pip drawdown, 100 pip gain. So if I did 74 pip gain, you're still at a one-to-one. Okay, so I'm willing to take 76 pips potential loss. So actually less than that, 75, or this was the top one. 75, 74 pips as my top to now drop back down. Now, once again, this is a judgment call. I also realized this morning there was ADP news, which is news related to the US dollar. The US dollar overall has been strengthening because their economy is getting stronger. So when I looked at that, I took those factors into consideration. And this is something that I do personally that, you know, I don't recommend, everybody does, but it's something that I've learned over the years, or over the year that I've been trading, is when the market starts to move, if there's news, it's going to pull in a direction. And if it pulls back for a bit, you're okay, because it's going to, if the news is bad and gold rises, then you're going to get out. But if the news is good, it's going to pull a bit down, and then you're going to get essentially this candle here. This was your news at 8:15. Okay, so you can start to see here it basically consolidated for the most part up until 8:15, right? If you want, with all things being equal, right? So if you said, okay, you know, maybe I don't believe you, Ted, this is not all consolidation, but when you look at it, it sort of is, right? Because I mean, we don't really have a clear trend, and then bang, it pulls down. So when you start to go look at your chart patterns and you say, well, what chart pattern was this? You could probably go figure out which one it is, because honestly, I couldn't even tell you. I don't even care about the chart patterns. It's not my cup of tea. I never learned all the wedges and engulfing this and burying that and doing that. I just looked very simply, and what I did today was, okay, if we break that level and we break this level, I'm going to be profitable. That's what I looked at today. That is basically all I did in the 1-minute frame, to be specific, is I looked at the other 15, I looked at the 4-hour, I looked at the 15, and I basically said, all right, you know what, it's going to probably take a ride for a bit because the market's open, but as soon as it drops down over here, if it breaks this area, I'll take a close on that, and I'll take my take profit in this region here. More than likely it's going to pop up. It created a little bit of a zone, created a zone, created a zone, created a zone, right? So there's a mini zone here in the 1-minute chart. You have a mini zone. But as soon as we came up to this point, and you can see right away, which if you want to look very closely, this point is lower than this point, right? So automatically, if you were not any smarter than Forrest Gump, you could turn around and you can say to yourself, well, Jenny, I think it's going to continue going down, because you have this information. So when I see people trade from their phones, or when I see people throw up charts and I don't see anything to give me information, I sort of sit back and think to myself, well, what are you doing trading? Like, you're just showing a chart just to sort of fit in. Like, this is the kind of information you should be looking through and combing through and being a detective with when you look at your information, to figure out, you know, exactly what's happening and why things are happening the way they are. And when you start to examine this, you start to realize, hey, shit makes sense, because you know what? The candles are telling me what is happening. These candles are telling me what is happening. Like, you can start to see, if I zoom out farther, you can start to see here, the candles are telling me something. What did the candles tell me? We had, even up here, you had these ranges right over here, right? So you had all this little la la la, then a drop, and la 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 la, then a drop, oh, then a drop. All in the 1 minute time frame. If you just took a bird's eye view and took a better look at essentially what you were doing, down, down. Okay? So when you start to examine things and you start to look closely at your charts, you start to see these things. And obviously, it's not going to happen right away. And when I say to people, I say to them, I want to, play with the charts and guess things. This is what I used to do when I was in front of the charts and, I was learning how to trade on my own. I'd be going through these charts. I'd actually be going through like the 1 hour and, sort of doing this thing here and saying to myself, okay, what's happening? Okay, like where's a support and resistance? Okay, like there were bottoms here. All right, so that's going to go back up. I don't know why that's going up. If I look over here, what's happening? We had this huge drop, but you can see on the 4 hour now, like if I look at the 4 hour, you have this trend almost, things started to move. So, when people say, oh, the gold's in a downward trend, it's like, well, not really, because you can see we're still pushing up, right? So yeah, it came here for a correction, but at the end of the day, you need a bit of correction for it to continue on. So here's where if you're trading intraday, you would turn around and say, okay, I'll take a downward swing, but be aware that the overall trend is probably up. So, don't get caught into that, I'm going to hold my downward trend for the rest of the time, when more than likely it's not going to work for you, because you're gonna have that issue of, hey, we're still trending upwards. So always be aware of that. So be aware of the overall trend so that you can attack. And as an example here, if we go into the 4 hour candle with gold once again, uh, this is going to be messy, so let me give a second here. Okay, now let's do this. Sorry, I'm just doing this on the fly. Oh, this is perfect. All right, so similar to what I drew the other day, right? So we had this zone here. And then what you can say, I would say that, yeah, that's probably too wide of a zone, but whatever. For argument and education's sake, we'll just call it a zone. So you can see here, once again, if you evaluate your zones and you say to yourself, okay, well, what's happening with gold? You have this region, you have this region, right? So if you, and then once again, you have this region over here. So when you start to look at that and you go down, we'll look at the times. Oh, that didn't work too well. But you can see here, when we go further back, you can start to see, okay, back in February we hit that point, in March, and then now in April, right? So that sort of gives you an idea that it's probably a major zone, because we're tapping them at those like almost like once per month. So I mean, these are things that you have to think of when you're evaluating your charts, and to give yourself information to say, hey, what makes sense and what doesn't make sense at that point. And that's what you're looking for here. There's some questions. Do I use Fibonacci to set support and resistance zones? No. I mean, Fibonacci will help you because you'll be able to get information. But I mean, really, like if you want to see us like a resistance level, here's your resistance, probably right over here. If you want to get technical, probably, yeah, that looks good. And your support, let's say probably right there, right? So, you can start to see things are starting to make sense. You had a little bit of pull down here, but you can start to see where you have, like, once again, you're tapping into zones, right? So there's a zone. You got your zone there, matches up with your resistance level, your support level. You can start to see here, we failed it, right? So you don't really need to use Fibonacci. I mean, definitely you can use it, but I mean, once again, it's just pretty much naked chart trading, like just seeing where the market is going and what it's doing. but also understanding why it's doing what it's doing, right? So like here, this was a big news event today, right? So we got this push up here, but maybe the market's set up for that, right? Because you can see what, once again, you had push down, push up, push down, push up. So what's going to happen next? Maybe now we're going to break this zone. So these are things that you want to, oh, okay, good. I made money today. Um, these are things that you want to be aware of so that when you're trading, you know that, okay, as an example, sorry, once again, with this area here, okay, if we tap here and we pull back, maybe we're going to pull back, but then it might drop here. But if it taps here and rejects, we know we're going back up this way, right? So these are things that you have to plan ahead for. So maybe a smart move is, to put a sell stop here and a buy stop here, right? So when the market goes through the buy, you collect money. When it goes through the sell, you collect money, right? But you don't have to worry about, oh, where's the candle around this area? You're already above that region. So you know more than likely if it's broken that zone, you're going to be on its way. So you put a pending order in. So people who say, well, you know, I can't trade all day or I'm at work all day, if you look at something like this and say, okay, I'm going to trade later, if I put my orders in there and then I put my take profit in this region and my stop loss here, when it goes down here, it takes profit, your trade's done. Likewise, if it goes up here and takes profit, you're done. So these are things as a trader you have to look at and you have to evaluate and you have to say to yourself, okay, well, you know, did that make sense or what's making sense at this point to help me out and to, you know, sort of guide me in terms of my trading and what I want to do. So hopefully that gave people a good idea of what's happening. So let's go through some questions. Uh, I will answer all questions and let's see what we can get through and have some discussion. Um, okay. I'll wait to see if people have questions. And, you know, I really don't want to, yeah, we're done after the questions. I don't want to go through charting. Like, don't say, what do you think is going to happen over here? I want questions related to what we just discussed because otherwise we can be here all night. I'll open up every single chart and we can analyze everything. But what I want to know is, like, do you understand when I talk about ranges? What makes sense in terms of how I approach the charts? What am I looking for? Where can you learn more about the Japanese yen economy? Probably if you just Google Japanese economy, maybe that'll give you information. Daily FX, stuff like that. Do you find pending orders useful? Yes, uh, um, they do work. Okay. I hope I made your orders a little bit easier. Um, okay, much clearer. Yeah, good. So if we get all that you just covered, what do you recommend I do next? Study the charts. Just sit in front of the charts and play the game of where do I think the charts are going to go next. Similar to what I just did here. I'm guessing. I'm making a judgment to say where do I think is going. How many positions did you stack? Once again, it's according to your trading plan and your risk tolerance. You don't want to over leverage, so you have to keep that in mind as well. Would you talk about major and minor trend and what trend is your priority? My trend and priority is based on the overall trend. I'm looking at the major trend. A pullback for me is just a correction. The overall trend is the one that takes over, and I'm mindful of where we are, once again, as I showed, in our support and our resistance. How much do you take into consideration of pre-market data? Pre-market data is important, but right now technicals are playing a bigger role than fundamentals. 5 books on economics, they're in the drive. Could you tell us how you know that the trend line would not break? Yeah, basically it's a judgment call, right? Overall, the trend was down with gold, and you know, so when you look at stuff like this, so once again, let's go back. All right, so we knew that Sorry, give me a second. I'm just pulling up the chart. Okay. So, I mean, going back once again to the chart, this is the 15-minute candle. Um, sorry, let me just move this out of the way. You can see where I drew out my ranges, right? And you can see where we had this top peak, right? So if you look once again, and comes down to experience and understanding the pair that you're trading. This was like a major region, okay? So I can't see what that number is, but give me a second. So right away, that's 1260. I should have known that just off by heart, but 1263 to 1261 is a major region. So we know that we tap this zone. Now keep in mind, when you tap a major zone, whether it's a support zone or a resistance zone, supply zone or demand zone, whatever you want to call it, the bigger the tap on like what I would consider a major resistance or a major support, the bigger the rejection. So those are things you will learn as you experience the charts, and that's where you get that push down and you get that hard push down because there was major rejection. We tapped a huge stack of liquidity. We got a premium price because this would be your premium price. If you were an institution and you wanted to sell, would you want to sell over here or would you want to sell over here? Like that's common sense, right? You would want to sell at the top region. And that is where now you have that push down. And once again, we pulled up into this region over here, but we're still pushing down. So there was nothing to tell me that we changed direction. Now, when I'm looking a little closer and I say to myself, okay, when do I think we're going to change direction? So we drop down, and if I start to draw out a trend line over here, at that point, I would start to be a little weary, and I would say, okay, maybe we're going to continue back up in that direction. This is your judgment call in this section here when you see your trends converge, and then it drops back down, so you know now this was your trend line, and then we're going to push back up at that point. And once again, this was all news related. This was news related. Whether or not it was coincidental that one news pushed it down, the other news pushed it back up, we don't know. We can only assume that the markets are done properly and not manipulated. But once again, we decide that afterwards. Okay, so I did that. Recommend broker. Yeah, paper trade, you can do that. Recommend a broker, IC Markets, Owanda. I don't know if it's going down. My previous webinars are in the vault for my groups only. Although we have all different strategies, what are the analysis tools virtually all successful Forex family can do without? I just showed you. How often is pre-market data used? I mean, at the opening bell at 9:30, you'll see where it moves. But I mean, like I said, right now it's mainly technicals that are pulling over. Ted, I've seen that you don't enter on the candle finish. How do you confirm your entries exactly when it breaks the body or the last candle, making a trend make sense? I just go into the 1 minute. The 1 minute gives me enough time. So would you take demo trades looking at charts and take trades based on patterns you see? Yeah, I think it would work if you did that. Yeah, work on the mental part. Okay, good. Since we rejected the 4-hour and it's a zigzag pattern and now 15 is going down, now we can out sell or wait for more confirm. You would want to wait for more confirm, but what you're comfortable with. And that's what you want to do is you want to be more comfortable with the overall trend. I mean, technically right now, like you could sort of see gold is stopped because it's 5 o'clock. But you can even see right now, just as a quick evaluation, like this is probably going to fill back up, right? This is an example of a wick fill, live wick fill. Because I mean, sorry, let me go over. There's nothing here to tell me that the trend is changing. In this, we popped that, but the wicks are still pulling down. So maybe we might get a little bit of rejection. Now, once again, if you look at the USD JPY, that'll give you an idea of what's happening. I mean, they're correlated, but gold will always move before USD JPY. So if gold's moving a certain direction, if you jump on USD JPY, that will move after gold. But once again, gold never moves that well in the Asian session, but I mean, you get the idea at that point. How long did it take you to master this field? I haven't mastered it yet. Does the market always fill the gaps for the news? Sometimes, sometimes not. Is it better to enter on the 15.5 or 1 minute? It depends on what you're comfortable with and what your range is for your pips. How do we become your student? You're probably already with a mentor. Um, how long do you wait before or after news to trade? Probably about 20 minutes before, 20 minutes after. That's probably safe. Okay, so I think we handled all the questions. If there's no more questions, you guys have a good day. I'll get this on the vaults as soon as I can. I'll have it, it's recorded once again, and we'll go from there. All right, there's one question. Okay, all right, have a good night, guy. Oh, there's a few questions. What would you tell me about your mindset about embracing uncertainty? Uncertainty comes from the fear of the unknown. Once you know the known, your fear goes away. It's like the fear of the dark. Once you realize there's nothing in the dark, you're not afraid of the dark anymore. Same thing with trading. When you start trading and you're more confident with your trades and you're more educated, you become more confident as you trade. Being unaware of what's going on brings lack of confidence, which brings fear. And that's why people don't trust their analysis. But once you do it over and over again, you become more trustworthy of your analysis, you become more confident. It's like shooting a basketball. First time you shoot it, you can't make a shot. Sooner or later, you get more confident you can make those shots, then you make shots in the game, then you're asking for the ball, you're taking the ball in. It's the same scenario when you're doing that with confidence. It takes time, it takes experience, and it takes practice. Alrighty, perfect. Yes, 10,000 times the same kick. How do we become your student and access material mentorship? You are already probably working with a mentor. They have similar stuff that I have. My next webinar will be announced in a few months. And if you guys want to jump on board with me or just stay with your mentor, once again, we all talk. We're all friends. We all like sort of hang out together. So I mean, you're not missing much. It's just more of personal preference, I guess. People want to work with me, other people want to work with Javier. It's just, or Rag, or Wakil, or Elias, or anybody else. I mean, it's just personal preference. I mean, we all try and help as best we can. All right, guys, have a good one. And we will, and I'll have this up as soon as possible.